Hello everyone, this is Phil Yaeger of Yaeger CPA Review, and it is Friday, August 25th at 4:40 in the afternoon. A few things people often ask me is, Phil, is that your hair? And the answer is, you bet it is. Okay, let me show you. See if I hear. All right, second question is, all right, how can you do these updates at 20 to 5 when you spent the whole day working? Well, it's what we call years of experience. That's what it is. Now, what are we doing today? We're actually going to talk about updates that are going to appear on the exam for the 1st of January, well, January 2nd, 2018. Now, a lot of these updates will be mentioned if you go to our website and you check off blogs, right? Megan, our Chief Operating Officer, will be actually doing a blog mentioning all of these updates. But there's two areas I'm going to try to cover in more depth, which will deal with the new revenue recognition rules, and also for non-qualified stock option plans, all right, you have to know the new journal entries. Now, before we get to that, let's talk about some changes that are occurring. First of all, dealing with the BEC area, don't worry about writing these down. They'll be in that blog. You'll be able to get it next week. All right, there's going to be questions on artificial intelligence, machine learning, automation, data analytics, blockchain and cryptocurrencies, cloud operations and data storage, cybersecurity, and digital business models. Now, also, keep an eye out for the updated COSO ERM framework that's expected to be published in September 2017. All right, and because it's going to be published in 2017, these rules dealing with COSO, all right, ERM, they will be eligible for testing in the second quarter of 2018. So don't worry about them if you're taking it during the first quarter of 2018. And once again, all right, we will give you a copy of this, and I guess we're going to be writing something concerning this framework that will be published during September of 2017. And this will be in our textbook. It'll be updates available to our students who have purchased our course also. Now, in regulation, all right, let me tell you what's changed. First of all, eligible in the third quarter of 2017, which means it's already required, all right, Rule 504 of the Security Acts, Regulation D, all right, the Security Acts of 1933, Regulation D, remember that's the form if you want an exemption, all right. The old rule says Rule 504 went up to $1 million. However, Rule 504 has been amended to increase the aggregate amount from 1 million to 5 million, all right, and that's to be sold within any 12-month period. And this is a good one. Rule 505 is removed as of May 22nd, 2017. So you don't have to know Rule 505. Also, eligible for the fourth quarter of 17, all right, President Trump, no booze out there, please, signed an executive order on May 4th, 2017, all right, and he signed that during his various tweets, promoting free speech and religious liberty. Also, directs the IRS not to enforce a provision that bars tax-exempt organizations from engaging in certain types of political activity. Let me see what else here you should know. All right, eligible in the fourth quarter of 17. All right, a district court case you should be familiar with is Adam Steele versus the United States of America. And by the way, we will have those in our book notes. And by the way, if you have the books already, all right, check our updates. All right, we're going to have updates, and that's going to be in the student portal, by the way. And also another case is James Saxton, Saxton Jr., all right, and Empire Group, LLC, versus Karen Hawkins, Director of the Office of Professional Responsibility, IRS. All right. Now, once again, if they ask anything about these cases, it's going to be probably one multiple choice, if any, on each concept. Now, on financial accounting, there's several changes. All right. Obviously, there's the revenue recognition rules, which I'm going to cover with you. All right. Those are changing, and they'll be effective for, I'm just looking over here, the first quarter of 2018. Revenue recognition rules are changing. Now, what do I think they get asked there? Maybe one or two multiple choice on that. Now, also, for not-for-profit entities, the presentation of the financial statements for non-for-profit entities, all right, will be changed. Also, under statement of cash flows, there'll be a classification of certain cash receipts and cash payments. And concerning business combinations, they're going to clarify the definition of a business. And when it comes to income taxes, intra-entity transfer of assets other than inventory. I don't know what they're going to ask on these things. They can't be, simulations, all right, multiple choice. But anyway, on the statement of cash flow, there's going to be a new area called restricted cash. That's new. And also, all right, we're going to talk about this. For non-qualified stock option plans, where there's compensation to the employees, all right, there's going to be a change on how you treat the difference between the excess of the compensation you have from exercising those options, and I'll explain that to you, over the accounting compensation expense. So if you have more compensation expense due to the actual exercise of the option, that's the compensation expense on the tax return, and that exceeds the book compensation expense, that gives you an additional deduction on your tax return. The excess over the tax return expense, over the books expense, all right, is called a windfall. And if you take that windfall and you multiply it by the current tax rate, all right, that will give you an entry you'll make in that year, which you'll debit tax refund receivable. And also, please remember, you used to credit additional paid-in capital tax refund or tax benefit from windfall. But now the change is this. For the excess windfall, the excess of the expense on the tax return in excess of the expense for compensation expense for non-qualified plans over the books, times the current tax rate, the credit used to be additional paid-in capital. Now the new credit is called what? Income tax expense. You credit income tax expense current. You credit income tax expense current. All right. So let me just make sure. All right. It says here the tax refund receivable, all right, will be the same. All right. But now instead of crediting additional paid-in capital, we're going to credit income tax expense current. Think about this. If you're getting a refund back from the government because you have a windfall, because your tax return expense exceeds your book expense from these non-qualified stock options, more expense on the tax return versus the books, right, is going to reduce your taxable income more than your book income. Now, that's a windfall. That's good. And if you take that windfall, which is a tax benefit, all right, if you think about it, any additional expense does what? It reduces your taxable income and gives you a further refund from the government. So what you do on the books for that windfall is you take a debit to tax receivable refund, or tax refund receivable, and you no longer credit APIC. Now, probably most of you didn't even know what that entry was before. But the credit for the windfall goes to what? Income tax expense current. Actually, I just went over that. All right. Now, people want to know, when are they going to start testing the new rules on leases? Well, they're not going to test them until the first quarter of 2019. I have looked at those changes, all right? They are unbelievable, massive changes from the old lease rules. So the question is, will they ask a lot of leases in 2018 if it's changing in 2019? And the answer is, I think they'll ask questions maybe for the first, second, third quarter, but it would be stupid to ask it for the fourth quarter of 2018, all right? Let me repeat what I just said there. The new lease rules, I don't know if I said this, will not be tested in the first quarter of 2019. So what's going to happen to the first, second, third, fourth quarter of 2018 if the lease is changing? Well, it would make sense to test it for the first 3 quarters, but the fourth quarter of 2018, I don't know. Hey, the rules changing, and major rules are changing. And by the way, the rules that they're changing, they're trying to come in compliance with IFRS. They're trying to take GAAP and make it into IFRS so that GAAP and IFRS, the rules will be the same. So that's why there's changes in all these lease rules. All right, now, let's see what else we have here. All right, some of the auditing is changing, all right, but I wouldn't get excited about that right now, all right? And once again, as I say, this stuff will be in a handout that we will put up on our website, all right? It'll go into the student portal, all right? So this way, please note, any updates, changes, all right, things like this, all right? I believe they're going into the student portal, all right? But whatever course you're taking, make sure you're aware of the changes. And by the way, if you go to the AICPA website, aicpa.org, not only will have the blueprints, the maps, the tasks, all right, it'll list when things go into effect. So if you don't have our books and your course doesn't tell you that, just go to aicpa.org. Yeah, since I explained to you, all right, the change for the non-qualified stock options, all right, and once again, that is in our book now. I take it back, it's not in our book. It's in the updates. So if you have our books and you want the new rules for stock-based compensation plans, all right, then what you do is, and by the way, in the present books, it'll be on page 2.187. That's the new pages for the new rules for non-compensatory stock options. And also, it'll go over to page 2.188 in our financial accounting book. Now, here's a big thing now here, revenue recognition rules, all right? Now, let me give you the steps for revenue recognition rules, all right? You can write these down. Step 1, and by the way, these are in our book, in our financial accounting book, 2.162, all right? And they're going to be tested started on the first quarter of 2018. All right, now step 1, identify the contract with the customers. All right, hey, I have a contract and I'm going to provide services for someone. I have to identify what that contract is. And I have to create an enforceable contract. Second step, identify the separate performance obligations in the contract. All right, what obligations do I have if I'm going to provide services for you? Step 3, determine the transaction price. And what is that? That's the amount of consideration the entity expects to be entitled to in exchange for a promise of goods or services that are transferred to a customer. And the fourth step, you want to allocate the transaction price to the separate performance obligations. All right. And step 5, recognize revenue when each performance obligation is satisfied. All right. So let me go over this. Step 1, identify the contract with the customers. Step 2, identify the separate performance obligations in the contract. 3, determine the transaction price and allocate the transaction price to the separate performance obligations. All right, let's assume you're going to, all right, you're going to install air conditioning system. You're going to also service it. All right, you're going to replace, certain parts as the parts actually break. All right. So you may have different performance obligations in a contract. But what you must do is, if there's separate performance obligations of the seller, all right, the transaction price has to be allocated to those separate performance obligations. And when do you recognize revenue now? All right, if you have different performance obligations, then you recognize the revenue as each performance obligation is satisfied, as it's completed. All right, well, those is the summary. And by the way, once again, on the new revenue recognition, I think initially there would be multiple choice. That is just my opinion, all right? I'm not going to say that I'm going to guarantee that to you, but that's my opinion. Ladies and gentlemen, thank you for your time. I know I went fairly quick on this, but I just wanted to give you a general idea on what these updates are, especially for those going into the first quarter of 2018. Take care, and thank you very much for your attention and your time, and have a good weekend.